Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
So welcome, Auvorians, to the Forecast for Trade Week call. Today's the 8th of May, 2020, and the year is unfortunately moving by quite fast. So if I could please, I have the chat window open as a separate Q&A window. If you could post your questions there, please, if you want me to answer them. If you want to just post general chat related to risk management and or this upcoming week, feel free to do that in the chat window. Let me do a quick, all right, cool. I always want to make sure before you guys know I get into my long diatribes that everything sounds good. And do note that I will be going through the Swiss CAD and some of the other pairs that have been on ridiculous rips. So just know that. This is a, because honestly, we need to get everybody to Orlando that can go to this. This is a post for a ride, the Wave Summit. So just take, I'm going to be there talking obviously risk management and all the other developers. So it's like should be like one hell of an event. It's also sort of like a 30th or a first year anniversary party. So let's go into Forex Factory calendar for the week. Keep in mind Tuesday, note this is May 9th through the 15th. You can always set the times to your local here. Go into the green little area if you want to filter out all the folder events. I only really care about red folder events. Obviously, the ones that have the highest impact are red. And just coming up in this particular week, the problem I have with anybody speaking in the UK, certainly Bank of England here coming up on both Tuesday and Wednesday, is there's a lot of our softwares that specifically trade pairs related to the British pound, right? So we have literally all week risk of Brexit chat, positive or negative, right? That plagues us essentially through most of the week. So if you've done really well, you know, Sunday, maybe even Monday night, certainly before Governor Bailey starts speaking on Tuesday morning, you may want to turn the software off, or at least reduce to mode 1, right? You're trading Neo. And keep in mind with Stratimus, Killian's put out a bunch of intro videos. You start to sort of get into the developer's mode. Make sure you're following all these guys on Telegram and myself and AP corporate at the very least. So essentially that's 3. Ideally, I would be following the 6 groups in total, including all of the chat groups that are related to each of our 4 pieces of software that trade right now. Do note that Einstein and Alexander are going to be shut off in about a week, right? So just make sure you have been migrated out. Hopefully you're not in significant drawdown as some have. And that's one reason we're getting rid of the damn stuff. Plus, we can't get any decent direction from the developers. It's another big reason too. So, in any case, that's all I really want to say on Forex Factory. Let me just drag into the screen here because I think this is important. And on your journey to your legacy, this is my Market Watch channel. I have posted a bunch of stuff. Okay, so we have candlestick patterns I've posted. I've been migrating stuff over from my other Market Watch channel. I think I've brought most everything over, but got a couple of new pieces this week. So subscribe to this channel if you want to see some of this. I thought this was important. I mean, really, honestly, whether you're trading Arrow or any piece of software, you're trading stocks, commodities, you know, you name it, even in the options and Forex markets, you know, really is the core basics of understanding what a candlestick chart is. And I went a step further. So I always would tell my students and those interested in learning, just sort of print this off and understand how each candle works, right? There's lots of different terms for these components of the candle, but the key thing is just understanding what the components are, because there's an absolute ton of that money that can be made by just understanding the simple bodies and how much, what I like to call the wick or the upper shadow of the candle is printed. So this is a piece here as well. This is the Comprehensive Candlestick Trading Bible. Okay, this is invented by an Asian guy home a long time ago, and Steve Neeson brought it to the forefront. It's actually a very long book. It's 168 pages, but it is really truly the Bible. So this is where I'll have all students, regardless of what they're looking to trade, I have them start here. Okay, so between that and some of the other stuff I've posted, I think this will be real helpful for you guys in your education. And then obviously just some of the patterns, right? Bullish, bearish, neutral patterns. I've posted them in a couple of, there's some overlap in this because I think it's just good to have repetition. But just understanding these patterns will help a lot. And this really is, many of these apply, you know, obviously the higher the time frame you go, the more significant these patterns become in terms of strength, right? Or solidity of whether or not it can be its self-fulfilling prophecy in some cases. But, you know, I talk a lot about shooting stars. I talk a lot about hammer reversals, you know, because there's some of the more prevalent ones that dictate a change in trend. So there's some good stuff there. A versus B broker. And so make sure you're in there subscribing, pull some of that stuff out. Let's move on to our continuing education here. We'll call this Candlestick Day. So the reason this is important is once you understand the patterns, then you have to understand your edge in the marketplace. And your edge really just very simply can be derived by, you know, studying the 10 strategies of Arrow, right? Or whatever strategies are related to whatever software or whatever manual trading you have to do. You want to understand at the very core that once you get the patterns, you have to understand what breakouts mean. You know, I talk a lot about initial balance. I think some get confused and don't necessarily work about auctioning, because this is just an example of many years ago, the ES, which is the S&P 500 E-mini contract that I trade for a variety of individuals, including our own family. But once things break out, you know, you have a trending up pattern. It's not tough to recognize, right? See the double bottom pattern here, which leads you to believe that maybe we'll have a move out of this balance area right back into another balance area again. So oftentimes when I look at the charts, you know, my apologies, I have a tendency to go real deep on analysis, but, you know, understanding just the basics. And it doesn't necessarily have to be a 1 hour time frame. This can apply to anything. Some people trade on a 5-minute chart, which is very normal for the futures markets, right? Forex, you could trade usually on higher time frames because, you know, many of these patterns are more volatile. So you'd want to trade on a 15 or a 60-minute. Some even trade higher patterns, obviously 240, which is a 4-hour, and then all the way up to the daily, weekly, and monthly charts that I show. So just trying to stick to big picture. But I think, you know, a good 60 to 65% of your education, maybe even high as 75, will be just mastering candlestick patterns and all the risk management stuff that I talk about all the time, in addition to the video I posted last week of my time in Tennessee talking about risk management. Really just understanding where the edge is in anything. So let's go into the charts. S&P real quick. New highs, no surprise. Notice these quite pullbacks fooled a lot of folks, didn't fool yours truly. We are still heavy in equity and client accounts until further meltdown. They're going to look at 10-year. This is a 7 to 10 year. Again, that balance I keep talking about, we're still stuck in it, peaked our head above it, right? And I think a lot of this had to do with the employment numbers on Friday. which were surprising to most, even the most bearish. The employment numbers weren't that good in the U.S. I mean, I didn't think it was a surprise because, quite frankly, I live in a state where they're throwing so much money out. I can understand why a lot of average salaried workers don't want to go back to work. They're getting freaking paid. So it's good to see that some states are cutting off the federal unemployment pandemic assistance, and that's going to force people to go back to work and get everything back on track, which is what my hope is for all of these families. Is don't be caught up in that laziness, man. Get out and work. So this is the 20 year. Again, still stuck in that range as well. DXY. So let's spend a little more time here. It seems like I've talked exhaustively about this the last year, and honestly, you can't talk too much about this, right? But here's key. So we held, and again, no surprise, right? So if you're new to being a subscriber, welcome. If you watch any of my videos over the course, or you participated in our events on Tuesday or Saturday, you know that I've been talking exhaustively about just the decline of the dollar. If you look at just on a month, let's just look at the weekly chart. So this is a whole last year you're looking at right here. We're way up, not much to explain other than just pandemic craziness, right? But then the dollar started to weaken as we continued to bring more debt, still considered to be the reserve currency of the world. I guess certainly some people would argue that point, but been weaker. We expect it to break this 89 area. Could be the week that it does it. Very much could be. And then eventually head to the 85 area. So just know that if you're trading a lot of other currencies related to the dollar, with the exception of some of the ones that have really been moving strong, you're going to continue to see them move to the upside as the dollar weakens. So just keep that in mind. It's the basic theme. So we're back to the daily chart. Got to really break this 89 area, all the way 89, 30-ish area. This area goes, we're going to have a pretty big move. So my advice is, if this area breaks, keep in mind most of this is related to euro, comprises about 60% of the components of the makeups of the currencies that comprise this index. So the moves will be swift up in the euro if we break this area. Who knows? We could spend another year bouncing off this area. It's just very hard to tell. I do think that most think the dollar is going to come back strong, at least in institutional land, from a lot of the guys I talked to on different trading desks. So, the market's always going to do what surprises the most. A great example of that recently was the jobs numbers for the U.S. on Friday. Surprisingly low growth. All right, Euro USD on the flip side of that, and we'll get into some of these crazy pairs. GBP CAD. Again, not a surprise though if you were following my advice just from the big picture. Big support here. This is a little easier to see. So on daily chart, big support. So far we've rallied off that. We don't get too much more of a rally. We're probably, I don't know. I'll take the fifth on this one because we got a lot of discussions next week by the Bank of England guys and Bailey. This could be just bananas. And I know a lot of you don't want to hear that because it sends a lot of the software into tailspins. But at the very least, with Neo, cut your risk down, maybe turn off mode 2, maybe have mode 1 at maybe no higher than a 20-25% risk, which seems really dialed back. You can always just turn the software off, right? Remember, there's nothing wrong with having the software off. I think I've seen, as I sometimes will troll through these chat rooms, some of the common themes I see that are absolute glaring failures in risk management is simple things like trading with money you can't afford to lose, letting your emotions get caught up in this stuff, right? Those are the two big ones. Just understand that the vast majority of 7-figure traders, unless they were really lucky, have lost a ton of money on the way to that profit, right? Sounds daunting, but the cool thing about a lot of our, semi-automated, more automated based algos is that especially with Arrow, which is, really honestly where everybody should start. I recommend if they have the time. If you don't make the time, it's going to teach you a lot along with what I do and just general understanding of how to trade. But the key thing to any of this is that we have really, I wish I had a quarter of this education to help me cut the learning curve way back when I was getting into the Forex markets in 2006. So the problem with what I'm seeing in a lot of these chat rooms is people, one, don't have the patience. Two, they don't have the fortitude or the tolerance to deal with it, right? They expect instant profits. And probably becoming just as damaging to the psyche is number 3 and 4. Hell, I could even consider it to be 5 levels of issue, is everything that's going on in crypto. So a lot of people put, and I've come across a lot of millennials that have put ungodly amounts of money in something that at some point is going to have its coming to Jesus day. And I've heard all kinds of stories from some of my traders, even friends, hell, even my partner in our new firm, First Down Financial, his kids clobbered it in crypto. And I keep telling Brad, look, at some point, this 25 grand, which is a ton of money for this kid he's made, you're going to have your day. So take some off the table, right? Diversify in other areas. Now you have the ability with that kind of capital, as long as you don't need it, right? And he's a college kid. You can maybe invest in other areas, equities, trade more Forex. Some of the bots we're setting up for Brad with Auvoria. So, take the cues from that, from just a general discussion. And now I'll move on. CAD CHF JPY. Let's take a look at that one. It was requested. All right, so no surprise if you've been listening to any of my chatter on the weekend. Let me reset this. We broke out right here. So for those softwares that aren't trending, and if you can't see that line, let me just draw it. This is a long-term breakout on this currency. So anything above this green line is a breakout. I would not have accepted any trades that were short in front of this. Just wouldn't have done it. And this is on a weekly chart. Take a look at monthly, right? Still solid breakout above this area. Who knows? It could be absolutely just going out and barbecuing tons of short institutional accounts, just ripping up. I have no idea where it's headed. All I know is that it broke out, and in the initial stages of the breakout, first couple of weeks, I'm not stepping in front of the freight train. Euro USD, always start with a daily chart. See the bigger picture here. Dollar weakens, this rally's still inside a much larger balance zone that we've been in for almost 2 quarters. I expect it probably to move up more. Euro GBP, don't really talk a lot about this. Inside a balance range. GBP CAD, been talking about this a lot. Ideally, the software is recognizing we're in a downtrend. It's going to sell the rips, right? So if you're not sure what I mean by that, as we broke this area right here, I personally wouldn't have accepted anything in a long until we've had a really protracted move like we did right here, which arguably, by the way, there's another support line right here. That's why I bounced off of other time frames higher. And then I would have absolutely shorted the rips. Not buying the dips unless we get super extended like we did down here. So if you knew that going into accepting trades one way or the other with whatever software's throwing trade requests out to you, you do understand where you have at least a higher probability of where to accept the trade. What is MXN now? Please tell me. MXN, what is it? Let me know. All right, CAD, CHF. Let's take a look at this as well. Daily chart. Still inside the upper range. You know, we had a big move out of, no surprise again, right? Wouldn't have been accepting freaking shorts off this pop. Would have been accepting longs only. Al, I certainly hope you're not trading the US Mexico. I would not recommend that pair. I don't even have it in the list, but I'll take a look at it. This one I know nothing about the technical analysis of. This is US Mexico peso. Not something I'd be messing with, quite frankly. But we're in a very tight range. You can see daily chart. And by the way, guys, you know, the great thing about TradingView, I have no ownership in this company. Hell, I wish I did. But it's really not that expensive. It's anywhere between 15 to 20 bucks a month for the pro version. And there's tons of developers that write code for different technical indicators you can overlay on this thing. The big thing that's missing on this is the order flow, which is really key to a lot of trading, but it's difficult to aggregate order flow on a Forex chart. It's much easier on equities and the futures markets and commodities, mostly the futures markets. Anything that has an aggregated, centralized volume that's executed on a single or a group of exchanges, right? Like Chicago Mercantile Exchange, CME, where most of the futures markets execute on. It's a single. In some cases, they'll execute on the Philly or the CBOT, but for most of the volume that executes, it executes on a single index. It's much easier to chart and understand where the order flow is, and that's basically showing the executions and the volume related to it at its most micro level, right? It's like what I call the fine tuner. If you've watched any of my futures videos in the past, it is an excellent indicator of what's going on by institutional traders. So the peso. All right, so here's the Bitcoinage. Sucking in more buyers, in my opinion, for the eventual fall to 40. I mean, it's plain as day. It's almost a 200-day moving average. So at some point, if there's a big old coming to Jesus moment, this will be the first stop. You don't buy this as soon as it shows up in this area, by the way. You let it base out a little bit, right? A lot of times they've been buying pullbacks, but it's dangerous down right here, right? It always looks armchair quarterbacking Monday morning, right? Always looks easier that now that you had this huge green candle that ripped off one of the bigger moving averages, the first time it's touched this 100-day in a long time, right? You know, since what, the summer? Yeah. But just understand, if you don't think big corrections can happen in big currencies or anything, all you got to do is look at what took place. Let me go to the monthly chart. What took place in the coiner. See where we hit 20,000 here? Actually came out publicly on Twitter this month, which I normally do not do. And I said, if you own this thing, I would sell 7/8 of this, maybe the whole damn position, because it's going back down to 4. And a lot I caught. That's probably the first time I've ever experienced a tonnage of hate Twitter. I thought it was hilarious, actually. So I learned how to turn off my DMs. It was pretty comical. You know, who knew I'd be dead right? But I just thought it was just ridiculous. Kind of like right now, you know. So if you have an overwhelming majority of your net worth in this coin, and you think that since you've ridden it up, you are God's gift to trading, I would take some off the table. You'll thank me at some point down the road. And there's always those out there that'll say something like the following. Well, it's going to 500,000. If you take it off the table now, you're not going to have that opportunity. That's true. So what if it goes back to 4,000, right? See, a lot of people are just unwilling to see that. And that's the problem. They are not looking at the what if they're wrong scenario that I spend probably way too much time on, because I'm constantly looking at the counter argument for anything. I don't care if it's going long Apple, buying some used BMW, I mean, whatever the case is, real estate, right? You got to look to see what goes wrong. You ever watch all these property shows? Most of them are an exercise in a lack of risk management by these flipper guys, right? Now, there's a lot of pros on TV, but if you just had a simple inspection done on the house, a comprehensive inspection done on the place, you'd have found that termite damage. You'd have found the fact that the foundation was cracked or tweaked, right? And the vast majority of these idiots just won't even have a real estate inspection. I've never, ever bought a piece of real estate ever in my life without a full and comprehensive inspection. And I'll pay for the whole damn thing. I paid as much as $700 for a house inspection before, and that's fine. It's going to save you a lot of trouble down the road. Anyway, so back to the coin. There's a lot of coins coming out. Maybe you guys want to hit Tyler up at some point because he really is our resident coin expert. He'd get to talk more. I know we're going to add a crypto component down the road, but I think crypto education needs to come with the fact that if you're looking at the weekly chart, it very easily is a potential correction here to the 40. And if you have, and I make up a number, you have $4,000 to invest, I would probably put 1,500 in at this level, just in case I'm wrong. We go back down to the next level, which is basically where it broke out at 20. It's entirely possible. Then you can put another third of the investment in, right? And then if it drops to 4, can't say I didn't tell you. So, I think the big money will bail from this. And who knows? Again, what if you're like, hey, Steve, you're completely wrong? Okay, then put all your money in it. See if it goes to 500,000, and then just make sure you do yourself a favor. If you have a superstar trade like that, and I've had a few, I've tried very hard to stay away from the I'm a great trader, because then you just start going out there and you start what's called gunslinging. And a gunslinger, as you know, in these types of old world shootouts, they usually wind up dead because they're just shooting away and they're not paying attention to what's going on because bullets are flying everywhere. It's the same thing with a lot of trading. Sitting in cash is a position. All right, so let me take a quick look at some of the CAD stuff. So this is NZD CAD. Go back to the daily. Still in a range. Not necessarily the easiest to read, but you can see how some of these lines and or some of the previous support completely caught this, did a whole reversal once we got some pretty solid and very defensible resistance points. GBP NZD daily. Broad thing, large balance area. You see your tops, you see your bottoms. I expect them to hold. CAD JPY, no surprise. Japanese yen's been weak related to a lot of majors. We broke out. Would not have been accepting any shorts once we broke out of this very defined balance range. One of the questions I just got, and keep in mind, guys, if you put them in the Q&A window, I can sort of delete them as they show up. Answering most of these questions. The question was just asked, what are your top 5 favorite pairs? I always stay away from answering that, because guess what it forces you guys to do? It forces you to watch the developers' calls, because many of these developers have a much better grip on what's going on. Dasan talks about this in detail. So does Tyler with Gearbox. So these guys know better than I do. Watch the developers' call. Remember, the people that put the most time into this are the ones that make the most money in trading. I don't care what you're trading. I can tell you flat out, the people that put the most quality time in. Remember, quality time is not the following: spending hours and hours bitching about something in a chat window. Just remember that. That's not quality time spent on trading, right? Honestly, if I had a developer, or if I was one of the developers, I'd hire somebody to occasionally peel through the chat room. Obviously let me know of important questions or anything that pops up. But all the chitter chatter in mostly a negative tone, there's no place for it, guys. It does nothing for us other than for the person that has the bitch to vent, right? And I understand, look, I get it. It's currencies, it's the markets, it's trading, it's whatever you're trading, right? It's investing in general, right? There's going to be times where you lose money. I've lost money too. Even though I've won a whole piss load of awards, I still lost money. So I've been very lucky that I haven't lost huge chunks of money. And most of those reasons are just quite simply because I've been too much of a wimp to put huge chunks into stuff. Mostly because I just don't trust anything unless it's my own trading on a particular instrument or currency or the futures contract that I trust, right? That's why I'm to a lot of folks that I meet. I talk with a lot of people that are always pinging me up on DMs. They're like, "What do I do?" I'm like, I start off learning all the candlestick stuff, watching my videos, and then I get in that arrow room. It forces you to learn to trade. Some of our other trade rooms coming up, I know at some point, a lot of these room guys are really good like me, and they will certainly pound the table on this, but I still continue to see people that just aren't listening to the basics. I mean, they won't go into the AP Live Academy after they get their software and start watching, in my opinion, at least a few hours of videos at the minimum, right? I don't have the time. And then you're never going to make it in trading. I promise you that. So you may get lucky and buy some coins and make up a bunch on you, think you're God's gift to trading, and then you go out and blow it all somewhere else. It happens. I see it happen in 90% of these cases. So, and I don't want that for you guys. So that's kind of why I'm always in here squawking on the microphone or up on the podium. I'll probably saying the same damn shit on the podium in Orlando, right? Just get out there and put an active trade plan in place. I've actually submitted our 3 trade plans that we use with our FXES trader students to Josh and have the AP team. We'll have the board and look at them and all, and they'll be catered to more of a Forex markets, not the futures tinge that they currently have. But I think it'd be great. There's a short trade plan, there's a medium trade plan, there's a 30-page trade plan in there. But believe it or not, the one student that is my most successful completed the entire 30-page trade plan, memorized it, walked around everywhere, carried sheets with him, had it on his nightstand. The guy just made $950 last year trading options, futures, and Forex, all manually. So we're trying to get him to set up an account with a bunch of the EAs, which he's going to do. All right, what else? Do I go through Euro JPY? Somebody asked me about that. This is going to break at some point, guys. Just know this one really doesn't get a lot of exposure. So let's take a look at the weekly. I mean, this is a solid resistance line here. If it breaks, where's it going? Right up here. How, when, how fast? I don't know. All I know is I just don't want to be accepting trades when it breaks that level. Gold, take a look at it. I shouldn't look at gold much this week. Look at this break. Actually, we're on the weekly, sorry. So as I had mentioned, once we got above this 17, high 1700s level, we're probably going to see a little bit of a rip. I think a lot of this was due to the movements in wages related to unemployment as well as the bond markets. But you can look at gold, right? And, I always try and tell you guys how to find correlations, right? Gold rips, dollar dips. Sometimes one wags the tail of the other. Sometimes it goes the other way around. Notice that? So we're looking at gold spot dollar, DXY. A lot of times I'll jump back and forth on this on daily charts just to see what kind of correlations may be more solid. Correlation means, or actually in this case, a complete inverse correlation. But correlation in general means how are movements between two objects to be compared, or two instruments, or two currencies to a commodity, right? In many cases, they have a stronger correlation or a stronger inverse correlation to each other. And sometimes it's just not so strong. There's tons of tools out there that can measure this stuff. If you guys are bored, you want to Google, there's all kinds of tools you can use to measure these correlations. But, good, big professional traders use one's movement as a hint of maybe a pending movement in the other. I would say though, with gold, this is the real big level. If we crack 1860, we're probably going to 2000, and probably pretty quickly. As you can see, this congestion here, once we clear this, it's pretty much going to zipper up, I would expect, into this area where we will be taking, I don't know, 2 to 3% off of an overweight you have in client accounts in gold. And just for the record, I hate gold. I don't own any gold. I mean, physical gold. I don't need bullion sitting in a safe or any of that stuff. But I have a lot of clients that have a lot of bullion sitting around in different places because they think the world's coming to an end. But it'd be harder to turn your bullion into cash. They're just having stacks of cash sitting around, in my opinion. So we've got a step down in resistance, 1968 area, 1963, 1948 per spot, and then this entire congestion area, which probably has a whole bunch of stuff. But as soon as we clear that, I would think it's pretty much smooth sailing. See how we based, see how we came tight. Actually, you know what? This is actually a cup of handle breakout, you guys. Look at this. Maybe not. Maybe a double bottom mixed with a cup of handle breakout. So you have double bottom, tested it again, right? This is a very common chart pattern I have in some of my stuff I just posted. Now we came, ideally a cup, right? Maybe not the best picture. Double bottom of the cup can happen. But if you have a slight come up against resistance point, you have a shallow handle. See that? When we break above that, it's actually a buy point. Very solid buy point. A lot of people are like, well, why wouldn't you buy down here? Well, you can, but just, have it be a smaller position because you just don't know when you're here if this is support. What if it just continues down, right? I'm always talking in terms of statistical odds, right? Statistics class, as much as we all hated it in college, it served a tremendous purpose in the financial industry, right? Taught me a lot about mean to the reversion. Generally the key to any of this is a statistically significant win rate, right? Or a chart pattern that has a statistical significance in working. This particular pattern, albeit a little sloppy here, but in generally, I actually talked about a chart pattern in that our Tennessee AP momentum event. The win rate on something like this historically of not breaking down below it, at least for a little bit of profit, it's like in the mid 70s. I mean, it's pretty rare that chart patterns have that type of win rate associated with it. So from just a strict risk reward standpoint, this was a breakout. So the buy point was 1800. Now, if we come back down and test it again and it holds, or you see a bunch of dojis play out, it's still a buy. Don't know that I'd be chasing it up here, right? But it's still a buy point if this area holds. If this area doesn't hold, we're going right here. This area doesn't hold, where are we going? Going back down here. And then you have a triple bottom, which certainly is viable as well, provided you don't buy as the knife's falling right into this area, but you let it settle out and start to base a little bit before it launches out. Cool. All right. What else? GBP CHF. I'll show this. Show it again. Daily. Lots of confluence here, meaning there's lots of different things showing up at this whole spot 2580-ish area. I'd expect this to hold, provided there isn't some wackadoo comments coming out of Bailey or the Bank of England's reports next week. Just keep that in mind. Are you willing to step in front of the train? EuroCAD, did I show this? Show it again. Got to go the weekly to find out what's going on here. So we're probably bounced off this level because it's some sort of center point, which is very important. They're what's called points of control. In this particular case, it looks like it's both a volume and time-based point of control right here. Probably why we bounced off this area. But if you're trading this, 4,300. So question is, Nick, you always have lots of great questions. I appreciate that. Nick's trying to shake the good stuff out of us. Just understand this. And I guess probably while I'm on the subject of talking about platforms, to those that heeded my warning about Coinbase, you're welcome. I said to many people that hit me with DMs, do not buy this stock. Let it play out, right? This looks like one of those Twitter or Snapchat patterns after both of those platforms went public, and they had big declines. I know there's probably bag holders in the stock at 420 area. They're starting to bail. You can see them. So let this play out for the question I just got on that. Same thing with Roblox. As much money as these knuckleheads make, I still think we got to let it play out. I think we've got some pretty big moves lower going. You know, still think this could be a fantastic winner long term. But we can brag about my big hit this year, of all things, right? Playboy Entertainment. Who knew? Things just absolutely been killing it. Now it's really gotten stretched, and it's just the first time we've actually seen support and resistance lines show up since it broke out, which by the way was right here. And this has nothing to do with the magazine, guys. This is just the branding. Apparently the Playboy bunny ears have just been absolutely clobbering it globally. And it's a huge thing in the Asian markets. Who knew? It's almost like when Hef was alive, he should have just broken the companies apart like the current CEO did, got rid of his daughter, Christy, as CEO because she messed everything up, and just brought in some fresh blood to break apart the brand. Look how much more value has been brought to a company that used to be media only. Gotta love it. All right, what else? Currency-wise, are we going to talk about? I think I've covered them all, right? No, I haven't covered any of the Aussie stuff, have I? Because I did want to show this. We broke out. Actually, I'm sorry about that. I did want to show this. We're still in a tight upper balance area here. See, it's bouncing along all this. So we're essentially looking to, and obviously Josh, Bill, and Chris, and all of their outside advisors that I am one of, are looking for not to build a platform to do this, but essentially plug a number of components like a Twitch or a Discord into trading rooms, into some sort of central platform that can manage the whole thing. Now, I purposely have stayed out of any of these talks. One, I'm not a pivotal decision maker in this because, quite frankly, as just generally an outside advisor to AP, I don't understand these platforms. And I've been asking my son Evan, who's actually going to have him evaluate, because he's like a massive gamer, but he's also a mathematical genius. So I'm going to have him evaluate all this stuff, and we should probably have him come up on stage in Orlando and talk about all this. It'd be hilarious. The perspective from a 13-year-old from a trading room. But I love the fact that Telegram, brings everybody into a chat room. I do think that should be other ways to integrate live chat with like a Twitch type of structure, right? And I know there's platforms that manage all those different plugins. I think ideally that's what we're looking to accomplish. I know that the last couple of weeks, all of the executives have been meeting with some of these out guys, just trying to look to, make sure it's within the budget. It's something we can do to expand, because I'll tell you, I'm pretty sure, and my son's 100% on board with this, because he thinks the gamification of trading can be a huge draw for the younger crowd, but ideally we want individuals over 18 years of age, because then, at least as far as this country, you can make an adult decision with opening accounts and being more of a real investor versus just some crazy gaming stuff, right? So you want to make sure we're crossing the fine line and not dragging the wrong age subs in, which in my opinion is anybody under 18, right? But you know, what do I know about building a multi-level company? So always take that with a grain of salt, that kind of advice. But love the gamification idea. I think it'd be great. You know, win different awards, try and beat other, just make it a challenging group. So the charting software that I use outside of TradingView is called IRT. It's Linsoft's product, Bill Linsoft. I mean, it is primarily for market profile, footprint, which may seem here. So it's Linsoft's IRT. You can Google it. It's mostly for just trading the futures markets. There are some that use it to trade currencies. What else? I covered JPY. Yeah, I covered that. CHF, JPY. Yeah. GBP, JPY. Tight range upper. I can show that. CAD, CHF. Show that. Yes. All right, good. All right, coming up on 50 minutes, guys. I am done. Got a headache and need to take a nap. Too much poker game last night. So I'm off to bed. Everybody have a great week. And keep the questions coming, spread the word. More importantly, get everybody subscribed to the right channels and Telegram and so we have a better fan. Otherwise, everybody stay safe, be kind to each other. May the trades be with you.